I'm Pelshia, moderator for the conference call. Welcome to Brightcom Group Limited Investors Conference Call. The duration of the call will be for 1 hour. We have with us today Mr. Suresh Reddy, Chairman and Managing Director, Mr. Narayana Raju, Chief Financial Officer, Mr. Peshwacharya, President of Strategy, Brightcom Group Limited. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note this conference is recorded. Before we go ahead with the conference, Brightcom Group would like to mention that during the conference call, certain statements in this call reflecting Brightcom's future growth prospects or forward-looking statements which involve a number of risks and uncertainties that would cause results to differ materially from those and such forward-looking statements. The company does not undertake to update any forward-looking statements that may be made from time to time by or on behalf of the company. Now, I hand over the floor to Mr. S.L.N. Raju, Chief Financial Officer. Thank you, and over to you, sir.
Thank you, Pelshia. Hello, everyone. Good evening. Thank you very much for taking time out of your busy schedule to join today's call. We appreciate your interest in deeper understanding of our company's financial results for the quarter ending 31st December 2022. I'm excited to share the quarterly results of the company as published. Our company for the quarter ending 31st December 2022 have achieved 42% increase in revenue and 46% rise in the profit after tax compared to the quarter ending December 30th, 2021. Again, an exceptional performance by the team, which is ongoing and continuous. The EBITDA too had a healthy growth of around 43%. The quarter ending December 31, 2022, our company reported a consolidated revenue of rupees 2,865.17 crores, and the profit after tax stands at 43.93 crores. Going into the segment-specific information, during this quarter, we achieved a turnover of 2,747.86 crores from our AdTech digital marketing segment, which amounts to about 42.49% increase over year-over-year. And for the software development segment, the turnover is 117.31 crores, amounting to a year-on-year increase of 26.28%. On the ROE front, the return on equity front, I'm happy to inform you that as we've been doing, we continue to be committed to improving the ROE, and the ROE for the current quarter has reached 25.16% compared to about 20.7% for the year ending quarter ending September 30th, 2022, which is in line with our plan. We are committed to improve our capital efficiency and constantly to take this metric higher. And as of 31st December 2022, we have achieved the operating cash flow of 92.41 crores. You may compare to the free cash flow from the previous quarter, which were higher. One thing what we need to keep in mind is, in a great quarter where, usually the December quarter is one of our biggest quarters, and in such conditions, and then there is a, festival shopping and everything going on, we spend ahead of time, to fund the publisher payments and to block the slots. So we need to pay in advance. And the advertisers will be making us the payments after 2 to 3 months. So we will get the collections from that revenue in this quarter and forward. One more thing is our continued efforts to invest time and money in building the businesses across various subsidiaries and ensuring that there is continuous growth have resulted in our subsidiaries generating adequate cash flows. We have been nurturing our businesses and subsidiaries for some time. Most of our subsidiaries are now generating sufficient cash and are now able to see cash that can be returned to the parent company. We felt it as appropriate to put a process in place to get the dividend payout, this extra cash every quarter based on the available amount at the end of the quarter. I'm pleased to inform you that for the first time, we will be receiving a dividend of rupees 5.02 crores from our overseas subsidiaries, and it will be received before 28th of February in an actual cash remittance. For the quarter ending 31st December 2022, our approximate tax rate is 27.10%. For the 9 months ending September 30th, 2022, our company has reported a consolidated revenue of 6,028.84 crores. We have achieved about 60% increase in revenue and about 66% increase in profit after tax. Our subsidiary Online Media Solutions has contributed to about 44% of the revenue, followed by DreamArt Group at 19%, Frontier Data Management contributing 13% of revenue. Indian operations contributed about 4%. Looking at the regional contribution, the North American region, as usual, our biggest market, has contributed to 52%. South America has contributed to 22%, Europe 17%, Australia 4%, and Asia 4%. Let me move to data's aging numbers. The days outstanding in total receivables as of 31st December 2022 stands at 173 days compared to 131 days as of 30th September 2022. When a huge increase of about 60% of revenue, a huge increase of about 60% of revenues compared to 9-month period ending 31st December 2021. The other major contributors for this increase are the festival and holiday season in US and Europe, like Christmas, Thanksgiving, and other holidays. Second one is the advertising was at its peak during this quarter, and as per the Forbes report, US consumer spending has witnessed a 7.6% increase in this festive season year over year when compared to 2021. The digital advertising industry is expected to reach the $1 trillion mark in 2023 itself, as against the earlier estimates of 2026. So this has actually, one thing that has made to invest a lot, in buying the publishers slots in the publishers platforms, and then our sales will also improve. Going by collections in our January 2023, we are expecting to see an improvement in this DSO by March 31, 2023. For the digital marketing division, the current days outstanding is 152 days compared to 129 days as of September 30, 2022. The number of days outstanding in software division is 167.7 compared to 178.5 days as of March 31, 2022. Well, that's it from my side. I now hand over to Mr. Tesha, our President Strategy, to tell you more about our company and the future plans. Mr. Tesha, over to you.
Hello.
Tesha, over to you.
Hello. Yeah. Can you hear me? Should I start?
Please
go ahead. Okay. Thank you, Mr. Raju. Thank you. And all of you have got an idea of our results. First, let me take this opportunity of wishing you a very pleasant and good afternoon to all of you. And I have a few points to kind of take you through and tell. First one, I think you would have already got through our notifications, about the JV which we have announced. So I wanted to explain one concept called high growth model. So what is high growth model? So the company has decided, to implement its path-breaking hybrid growth model. That's what we call as high growth model. And the concept is to find a fast-growing partner in the form of a JV with them by offering the Brightcom brand and expertise and reach. And in return for that, the fast-growing platform is licensed into the JV. This is essentially the concept. And the upside of the JV is shared in a pre-negotiated ratio. The key here is to make sure that the deal is well protected through bulletproof conflict of interest clauses for both partners. I think this is the key, and this is what we have done. This is an innovative, if I may say so, middle path growth model lying between organic and acquisition-led growth. The high growth model is effectively capital light and will result in growth without the need for large capital injections, as would be in the case of an outright acquisition. So this is a little bit of information on what we mean by high growth model. Then let me get into a little bit of details, of the JV which has been announced. To this end, our company has already announced yesterday, day before, our JV with Consumable Incorporated USA, wherein the two companies will pool their respective strengths to grow the audio AdTech business without involvement of any major capital outflow from our side. The high growth model is a very high ROE model, and results of the same will become evident in the coming quarters. This JV, this joint venture, aims to really drive and revolutionize the out-of-home audio advertising industry, which is right now estimated around $30 billion, by introducing innovative solutions that utilize cutting-edge technology and really offer unique user experiences. This JV will directly benefit Brightcom standalone financials, as 51% share of the profit will flow into the parent, thus further bolstering the standalone numbers. Little bit of, I think, details I would like to get into about our JV partner, Consumables Incorporated. So, Consumables USA is an advertising technology platform founded by tech innovator Mr. Mark Levin, that really uses creative ad formats and platforms to offer compelling online advertising solutions. Consumables platform transforms uninteresting impressions into compelling audio advertising engagements. To give a bit more background, they launched one platform in Jan and just scratched the surface in terms of revenue. In February, that revenue doubled, and in March again it doubled, and the path continued. So they ended the year on that one product with approximately 30-40 million in revenue. So unprecedented growth rates really, and this is what we are, this trajectory is what we are expecting. Consumables is a well-admired, rated AdTech company in US with a lot of awards and has been in operation since the last decade or so. So this is a little bit about Consumables. Next important point which I want to make is no capital is being utilized in the joint venture right away. Hence, cash available in the company can be utilized for other effective growth initiatives as we deem best. For example, AI/ML, IoT, quantum computing labs, etc., etc. We also foresee a very healthy revenue path for the new JV in US. The next point that it's effective and profitable from day one. Hence, profits can be added to the standalone numbers. This is important, and there will be no ambiguity about the results, audited results. There is profitability from first year of operation. Also importantly, as it's a joint venture, no permissions are required. So that's a key point. And of course, it makes Brightcom standalone numbers better, healthier, and considerable. Next point is, right now, to our best estimate, consumable has around 200 million consumers. And these customers of consumable will be offered Brightcom Group to and to its advertising partners and publishers. So this is a good one. In exchange, consumable will get to use Brightcom BCG technology platforms like Brightcom Compass, etc., and also get access to Brightcom publisher network and direct advertisers. The next point which I want to make is, because we have a 51% stake, majority controlling stake is with Brightcom Group. Few other points I just wanted to share. I think already Mr. Raju has mentioned that in 2023 already US AdTech industry is $1 trillion plus. And interestingly, if one looks at the concept of OH and what they call radio audio, this is actually 7%, 70 billion industry. And if we specifically talk of OH audio advertising, what it refers to the broadcast outside of home, typically speakers, which are located in public spaces. This type of advertising can take many forms. So I'm just trying to clarify and say a few pointers which help people in understanding what is this OH or outdoor audio advertising we are talking of. So this is just a few clarifications. Number one, it can be in-store audio. So advertising messages and communication messages played in retail stores, shopping malls, and other commercial locations. Next one is outdoor audio. Advertising messages broadcast from speakers located in public spaces such as streets, parks, and public transportation. And number three is ambient audio. Background music and sounds played in public spaces, often with embedded advertising messages. So it actually covers all, and this is a growth area. And OH or outdoor audio advertising is typically used to reach consumers who are on the go and often also multitasking, which may be difficult to reach through other types of advertising media by delivering audio messages in these spaces. And thus advertisers can reach a captive audience and create a memorable brand experience for their consumers and customers. So this is in short a little bit of update and the background to what is audio, outdoor audio. Thank you from my side, and with that I hand you back to the moderator.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If we have
Hold on. I have no. You haven't. This is Suresh Reddy. Let me finish my address to the audience, then we can go for Q&A. Yes. Okay. No problem. Yeah. First of all, thank you all for being on the call today. I really appreciate all of you coming on the call and the interest you have been showing on the company and the progress that's happening. I'm sure you've already gone through the results in fairly detail by now. And let me just start off by saying that this has been a thrilling quarter for us, the best quarter ever in the history of the company, and we want to see more of these going forward. Q3 to 2023 will be remembered by all of us here at Brightcom for a long time to come. It had a lot of things. We'll try to get to the details there. Despite the uncertainty in the global economy, our team did a spectacular job. I am personally very grateful for the outstanding work delivered by the teams across the world. So I'm very, very happy about this. Before I dig deeper into other things, I want to bring a very important aspect in front of you at the very beginning itself. This is our sharpened focus to bolster our standalone parent financials and numbers. Basically, we have been growing our subsidiaries over the years, and the standalone is slowly becoming smaller and smaller because the rest of it is growing. I think we decided to take a strategic step towards ensuring that the standalone also grows at the same rate, and the parent company has a substantial business flowing through that as well. That is the main point I want to emphasize on this call. This is like a take-home point. If you want to take 1 point home, this one, I would appreciate you if you can take this back on this point. Our CFO has covered most of the financial details with respect to the results. Additionally, we have completed our long-awaited inorganic growth initiative for audio advertising through a joint venture with Consumer Goods. Details were nicely elaborated by Peshwa. Unfortunately, we could not have Satish on the call. We had some personal situation, so he could not be on the call today. So Peshwa substituted, and thank you, Peshwa, for that. Then I just want to talk about two strategic thoughts that we worked upon this quarter, and at the cost of repeating the point. The first one is bolstering the standalone financials, which I talked to you already. This is very important because, how do we go about doing this? What are the different ways to do it? If you look at it the way, Akshay talked about, we have invested, we have built our subsidiaries over the years, buying them, investing in them, growing them, reinvesting the capital that has been put up and back into the subsidiaries and grown them over the years. It's time to now start figuring out how it gets returned back to the investor or the parent company. That's what the first step we thought is, let's take, gradually figure out a dividend strategy, which is every quarter we would look at the cash position and the requirements of the subsidiary, and as a subsidiary we decide how much of it should be sent back to the parent. So it should be sent in the form of a dividend. There will be a tax component, but I think yet it is important that it flows through back to the parent, and the parent gets stronger for other initiatives the parent can take, or even dividend back to the shareholders of the parent. This is the strategy I'm thinking behind. And it's also, there are some concerns you keep hearing about, the cash and subsidiaries and things of that nature. So this will be a best way to establish veracity of the company's profits apart from tax payments that they're already doing. So this would be, a very welcome step from the company's perspective. Board really is behind it. Second one is the high growth model. While I don't want to get into as much detail as Peshwa talked about, it is a smart way to find, leaders or fast-growing companies who figured out the magic formula, if you will. Someone may have a technology, someone may have a market, someone may have a platform. And if they are growing at a very rapid pace, but they do not have the reach that Brightcom has. We are now about to touch 100 million impressions, if you really look at all the 100 billion impressions per month, if you look at all the advertisements that we deliver. So we have a very large reach, plus we have a relationship globally. So we bring a lot to the table. So we go back to these high performers, shake hands with them, and help them grow, and obviously take a portion of the growth. That is the broad idea behind the high growth models of doing joint ventures. Us, because of this, and then we want to do it directly, it ties in with the first concept and first strategy very nicely, where it ties in directly with the parent, so it will help the parent get stronger. This is broadly the two main strategic things that we have worked upon in the last quarter. Other things that are out there, I just want to touch upon. One is final settlement is very much in the works. As we discussed a few weeks ago, it's work in progress. We have not yet completed it. I do not have a timeline yet. We will immediately inform as soon as that is done. So that is standing. Just like this was done, it took a little longer time that we were able to execute. I would request the stakeholders to be a little patient with us on that because it is going to be done. It is a done deal, except the final execution is taking a little time. That is the point. Then coming about governance, as we talked about governance in the past, there has been a lot of talk around governance, our governance practices, and we have taken aboard all the points. We are looking at how we can get ourselves better. A listed company like ours should listen to the feedback. That's very important. We are continuously making amendments to our practices. I assure you, we are doing it aggressively, though it may not be on the surface. And I also want to share that there has been a lot of personal criticism on me as well over the social media over the past 2-3 months especially. But we have taken all the points quietly and have not responded to them actively for the same reasons, because feedback has to be taken, because when our intentions are honorable and absolutely pro-shareholder, there's nothing to fight back. It is actually better that we get as much feedback and start fixing things at a process level. Whatever may be the gaps in the execution of our intentions, we are fixing it, and we will continue to do so. I just want to assure you, all of you, about that. We never rebel against negative feedback. We will take that, and it is the area for us to become stronger, and we will continue to do so. As it is said by a famous author in Europe, it says, what doesn't kill actually makes you very strong. That's the point on the governance, and so it's work in progress, and governance is not something we can, it's more in terms of how it eventually comes across. So that is, I guarantee you, we will start seeing a lot more of this going forward. Another big question that keeps popping up is about the status of the forensic audit with the regulator. This has dominated discussions around our company. I'd like to make the statement that while the regulator has been very balanced and responsible while examining the matter, I can tell you we have submitted voluminous amount of data. It goes on all the way to trial balances, even down to transaction level of 10 subsidiaries for 6 years globally. That is the level of granularity we have given. It's boxes and boxes of data. That itself should assure our stakeholders that there's nothing from us to be hidden. So we are just waiting for the regulator on the report, and we do understand the time it takes because the amount of data that needs to be examined is large. That's broadly where it is, but we are hopeful, the sooner the final result comes out, better for all. Beyond that, other points, I'll just go and look around some of the questions that came up, because this was another point that we did this quarter is we wanted to do a call earlier, because what happens usually is if you leave it and then do a call after 4 or 5 days, a lot of conversations happen and gets driven in the wrong direction. So we thought it makes sense for us to give a perspective so that the discussion in the shareholder community happens in the right way. Now, one more. I'll just look at the questions that have been sent today. Yeah, there is a couple of questions. There are a lot of questions, but I will try to see. One about the operating cash flow. I think the operating cash flow, the operating free cash flow this quarter is 92 crores. Compared to the previous quarters, the question has been a bit lower. This is the way it works because of the gap between the receivables time and the payables time. And receivables they basically are in the range of about 90 days, and then we pay every month. So when we have a large quarter like the quarter we had, obviously more cash is used, the free cash flow will be better. But that doesn't mean anything. The cash starts coming in the next quarter. So we're already seeing some of it happening in January. That is the point to be taken into account. The same point with regards to why the expenses have gone up. Fundamentally, our expenses, our biggest expense is the cost of buying media, which is actually turned around, added value and sold. So when we do more top line, obviously we'll do more bottom line in line with that. That is that. Dom, I think you've answered. And there's a question regarding I think we covered all the other things. Non-settlement, audio company, FA audit. So I would stop here and then let's take the questions. Yeah. Right now, I think, operator, you can go ahead and start taking questions. Now it's your turn. Sorry to have interrupted your conversation.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. First question comes from Vaibhav Kare, an individual investor. Please go ahead.
Hello. Can you hear me?
Hello. Yeah, Mr. Vaibhav.
Yes, good afternoon. And first of all, very congratulations for the spectacular numbers. So, as we can see, the numbers are increasing and we are seeing a high growth in the numbers. But if you talk about the market situation and the stock price, it's somewhat, we can say, it's going in the opposite direction. It's, something which we all investors do not want to see. So, one of the reason why we are seeing this is because of the forensic audit issue. And in the last conference call, I asked a question if it is possible to hire an independent auditor which can audit all the questions which are asked by SEBI, including the impairment issue. So whatever the work which is SEBI is doing, if we can hire our own auditor who can perform the same task, and we can publish those results to the benefit of all the investors. So if that option was discussed and
Yes, I remember now. Yeah, I remember. We talked about that. Definitely. Yes.
Right.
So we did not go ahead with it because I think it would be challenging the regulator in a sense. So I think we just wait for the regulator to come back. I don't think then you have to tread very carefully on such matters. So I was advised to just wait for the regulator to come back on that. Yeah, we did discuss this. I remember very clearly from the last call.
Okay. But sir, we do not know how
Coming
long.
to your other question about share price and things like that. Like they say, it takes 12 inches to make a foot. We are all doing a lot of right things in the right direction. Inch by inch, we're making the changes. You'll suddenly see the effect of the entire foot. So I'm very positive. Nothing to worry. Everything will come together at the right time. Yes, there is a little bit of hard burn and waiting, and that's the way it is. Okay, but I'm sure.
And also, okay, sir. And sir, again, maybe asking the same question again, but from your side, are you 100% confident that this forensic audit will come clean? What are your thoughts?
Yes, 100%. 100%. Like I just said, right? We are very confident. We've given there's nothing to hide. So if we have not done anything wrong, there's nothing to be afraid of. That is our take on this case.
Okay. And one more question, so this joint venture has been formed, but Peshwari said this has been formed without any capital infusion. So how is that possible? Is that a stock-based deal where we have paid some stock?
No. Yeah. Let me explain that in a little more detail. The structure of it. I think Peshwa talked about the overall the numbers involved and that. The structure of it is as follows. It's a 51-49 percent with joint venture. So what is done is there is Consumable Inc. as a company, there is Brightcom Group as a company, and then we create a new company which will be the joint. It's a new business, or it's just in terms of a technical structure. Nothing new there, but in terms of a technical structure, this will start the joint work that will be done through this entity. So what we are doing, what we are planning to do, their expertise is coming up with very slick tech solutions. Like Peshwa was talking about, there was this revenue they did one of the products in January and doubled every month after that. By end of the year, they were doing $3 million a month. So I think we ended up with some 30-40 million on that. So they're very sharp. Their whole idea is make it frictionless, make it easy for advertisers to sign up and see results. They're very, very sharp and clear about it. And we feel that it is a great skill to be able to do that in all kinds of markets. Now coming to the other side.
Dear participants, kindly stay connected while we connect the management team back on the call. The participants, kindly stay connected. Please go ahead, sir.
Yeah. Okay. Thank you. My apologies. I think I got another call. I was trying to turn that off and this got disconnected. So yeah. So I was telling that our contribution to the joint venture is our size in terms of the 100 billion impressions we have, the publishers we have, all those good things we bring to the table, and the reputation we've built over the years in the business community that we operate in. These two things together we bring to table. Then we have our CFO, their CEO, and we own 51%, so we have 2 board seats on that. They have 1 board seat. And then working capital requirement. The first 5 million we have promised to give, but then it's just working capital into it. And that is the cash outflow, if you actually look at it. But then after that, the business starts to generate its own. So this is broadly the technical structure of the deal. Does that answer your question?
Yeah, so 5 million working capital, which means that 5 million we are providing on day to like a regular operation or something like that.
As needed, see, because mainly here the options again is buying from the audio publishers, so for which the working capital will be put to start, to jumpstart the growth.
Okay. And when do you think these numbers, revenue and profit will be added to the standalone entity, like starting?
Right away. If we make revenue this quarter, let's say next 2 months, that will be added in the coming quarter. Right away.
Okay. Sir. And so last question. So we have talked about days receivable, right? And the days receivable has been quite high. So even in the software, segment, I think around 160 or something. So why in the software segment days receivable are high? Okay, in the ad tech industry, you can compare it to the ad tech division, with the trade that is fine. But even in the software division, days receivable are high. So why is that?
We work with some of the governments actually doing some of the software work for that. So it's a long collection process. So some of them just get stalled and so they mess up the overall average. That's all it is.
Okay.
And it's a small fraction of the entire, it's less than 4% of the revenue. And so we do that for a lot of reasons. And so we will continue to do that. So it's not a big dent to the overall company in any way.
Okay. Okay. Thank you.
Thank you.
Thank you. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. We have a question from Supreet Prabhu, an individual investor. Please go ahead.
Hi, Suresh, and heartiest congratulations
Thank you,
to
sir.
the entire team. Now on a lighter note, I think I can start by telling you, when you declared the results, you have declared it early. That's nice. But I think the time also should be earlier, because 4 lakh investors are waiting till 12 midnight to get the results. So I think I should declare it a bit earlier so that, we can spend time with our families and enjoy the results.
No. I have a counter to that, Mr. Prabhu. I have a counter to that. In all in good humor, of course. See, the fact that we have, pulled back by 15 days, roughly. So making you guys wait for a few hours is not so bad. I think it's okay. It's like that.
Now coming to the results.
Just in the lighter note.
Yeah. Now I think when we have reached 100 billion impressions, as you said. So now we had already, when we had reached 90 billion impressions, you had said that soon we will reach 100 billion and we will, it's something to thump our chests about. But nothing regarding the 100 billion impressions has been mentioned in the press note or this. I think we should, proclaim such kind of achievements loudly and clearly to the market.
It's complicated because this particular market, let me expand a little more. So what has happened is, last year the growth was different. This year the growth was different. Last year it was all, within the ad tech industry, advertising is sold in various forms. Like you have the CPM, which is based on impressions, which is the brand spend, which is the higher quality spend. The next one is the CPC, which is the click-throughs stuff, which depends upon the performance of the media or the publishers. So that is the next level. And the third level is your CPA, which is cost per acquisition, where you just run the ad. There is no performance of either a sale or a lead generated or some sort of an action. Then no money is paid. So this year, since the market has changed, the team very aggressively went into all 3, knowing already that. So obviously the number of impressions will spike up when you start doing non-brand stuff. So it's not comparing apples to apples. And so we were a little reluctant to come out and say, okay, we have crossed 100 billion impressions. Because it's a mix of all these. If you compare apples to apples, then it's much easier. We crossed way over it in that sense. So, again, you have to look at effective CPMs and such. So it just gets too technical and complicated. So the team said, let's hang in there, wait for a little more. And then when we feel comfortable, we'll come out. We'll actually include that in the presentation as we go forward. The sales guys have been talking about it, obviously, to give the size of the network that we have. But your point is well taken.
Yeah.
No.
And last question or a point to make is that, Q3 was remembered for bolstering the standalone profits, standalone company, right? And of course the audio acquisition. So let Q4 be remembered for, some lot of ESOP buying and support by promoters and good presentation to DIIs and FIIs and roping them in.
We will try, sir. I'll only tell you after the quarter.
Okay, that's all. Thank you, and heartiest congratulations again.
Thank you again. Thanks for being on the call and asking the question. Appreciate it.
Thank you. Next question comes from Rajan Bave, an individual investor. Please go ahead.
Yeah, hi, Mr. Suresh Reddy. First of all, congratulations, fantastic set of numbers for Q3. I guess most of the questions are answered. Yeah. I guess most of the question you answered on cash flow and DOM. I need to ask regarding shareholding pattern. Management explained it quite well, but how much time it will get to take back the shares?
Hard to tell. Let's see. We are working on it. I don't have a clear timeline for that. Let's see. Let's look at this quarter. Maybe next quarter I'll be able to answer that. Let's see how that plays out.
Okay. Because market is really looking forward to you. If you can increase your holdings, it will be very positive growth.
Point taken. Thank you.
Okay. And please settle DOM as soon as possible. Yeah. Thank you so much.
Yeah. Thanks a lot, Mr. Rajan. Thank you.
Thank you. Next question comes from Bhupender Singh, an individual investor. Please go ahead.
Good evening, Suresh sir.
Good evening, sir.
Hello.
How are you? Please go ahead.
Yeah, heartiest congratulations for the excellent numbers, in this quarter 3, the highest so far. Wishing many milestones in future to come. I have 2 questions, sir.
Yes, sir.
First is, since now BCG has sufficient free cash flow and reserves, do we have any plans to buy back the shares so that to boost the, investors' confidence? That's number 1. And number 2, about reaching to the domestic audio market, since consumable ink has already been formed now. So a lot of scope is there for the domestic, appreciation in the Indian market. So these 2 questions, sir.
Perfect. Very good question. I'll answer the second question first.
Right.
That's the easier one. Okay. So definitely, we are toying with the idea of, India for this particular. It makes sense. Maybe not just India, the region all over, because we are a community who's always outside, meeting friends and things like that outside. We sit out, have coffee, restaurants and travel and all that. So there's a lot of outdoor activity and music is very much part of our culture. So it makes tremendous sense. This is one of the things that we already discussed with Mark Levin also. So, but we first want to establish the working relationship between both the companies. It will take us, good 6 months. So we don't want to have too many confusing patterns in the first 6 months. We want to go after the US market. He's already working very aggressively on bringing together all the right partners to make that happen. So we are very excited about it. Satish will be part of that initiative. And then at the appropriate time, after a year's time, then we'll start looking at other markets. So that is the strategy, because I don't like to spread ourselves too thin in too many markets, and then it just makes it harder to execute. So that is point number 1. Coming to your first question, you asked about,
Buyback of.
You said about buyback, right?
Buyback of shares. Yes.
Yeah, buyback of shares. Yeah, the thing is, we are at the verge of a lot of great ideas that are coming together for bringing tremendous growth for the company. It will be capital badly utilized if we go back, we have raised money and then again go back buy back. It doesn't sound right. While I agree with you, it makes sense. A little bit of a buyback is not bad, but if we start, using the funds to do that, we should actually use the funds to grow the business further. And the opportunity is very, very right, and we feel, because we are at the front, driving this, we can see, and you are seeing that in form of results also. The growth rate is phenomenal, and I think 23 and 24 are going to be very, very huge, and we don't want to take the eye off the ball. And we need to be full with cash so that we can make the right move for the right opportunity. So it's important to keep the cash and look for the right opportunities to invest in. So there is no point, trying to play the market. While I said, there are, like I just talking to another caller before you, there are multiple things we have to do that will help the market. Just buyback is not a solution. That is the last fourth feet. I feel, you improve your governance, you improve, get your all your acts in place, and start doing things
start getting better investors to come on board in terms of, domestic large institutions. These are all things that have to happen. Buyback is an easy solution. It is like, you're just going in there and taking the liquidity out and helping it grow. That's not sustainable. And we don't feel that is sustainable. And buying a little bit to give some impetus is not bad, but I think that is not a long-term solution. That is my take, and and I'm open to debate on that. But at this point, that's how we are thinking.
I appreciate your answer. I'm fully satisfied. And thank you very much for the prompt con call also. Thank you so much.
Thank you, sir. Appreciate you being on. Thank you.
Thank you. Next question comes from Akshay Manurkar, an individual investor. Please go ahead.
Yeah, hello, sir. First of all, congratulations.
Hello, sir.
To your company. Yeah, first of all, congratulations, sir. Sir, I wanted to ask two questions. First is, if SEBI's results come after 3 years, what we are doing to boost investor? Yeah, this is first. Okay. And second, where we are seeing a company after 2 years, revenue-wise?
See, we don't give guidance. And the first question I'll answer later. We don't give guidance for 2 years in a row because it's a very dynamic market.
5 years,
we have technology market. Sorry?
Yeah. Go ahead, sir.
Did you finish your question? Did I cut in? Did you finish your question?
Yeah. Actually, I wanted to ask you, sir, where we see after 5 years, 2 to 5 years.
Okay, that's good. So this is I think I mentioned that on a previous shorter call that we had done also. I gave the example of the OpenAI ChatGPT. So it's a very dynamic market. You have to keep in mind tech can change things overnight. Good technology, good solutions, good teams, good investments on the right partners are important for a tech company to survive and flourish. If you do anything else, you get into trouble. If I come back and say, no, I'm going to go to this $1 billion or this number of things, that's not the way to do it. It's about creating solutions that the market wants and innovating. So we are investing on innovating, as you are well aware. We are looking at quantum computing. These are things one needs to do. One good solution in quantum computing can bump it to $5 billion, who knows, in 5 years. And I'll be saying $2 billion to you for the sake of giving you a number, and I'll be wrong. I mean, in a positive way. So you never know how these things will play. So as a tech company, innovation and good product is very important. Good teams that can execute and deliver good products is important. So we are trying to strengthen that whole scheme of things. Whether it is through good partnerships where we can learn and they can learn from us. So mutually we will help grow, where we can come up with better solutions and better products. Plus, in-house we are building a strong team of developers, strong team of innovators within the company. Plus, people on the ground. We always believe that sales guys, the guys who go out there and actually sell, have the best pulse on which direction the market is going to go. So that feedback also comes back. And our CTO sitting in Israel, he's got rapid prototyping teams that can go in there and actually develop solutions based on the market, what the market is looking for. And if there's no solution for it, that's an opportunity for us. So these are some of the strategies that we have in place. Now I know it's a very long answer, I'm sorry. But I'm starting to do like a yearly numbers, and it's actually helping the team also have certain goals to go after. So for example, this quarter, the team really wanted to meet the numbers and beat the numbers that we have committed to the stakeholders. So that was good. And so we'll see again come April, we'll look at how the market is. Again, the whole world is changing very rapidly. Different markets, Europe, US, and all over. And I see opportunities, but there is a lot of gloom and as well because some of the large players are having trouble. So as a company, we are very careful in putting unnecessary expenses and stuff like that. So we would not see announcement from us saying that we're going to fire so many people and things of that nature. We try to be very careful and take gradual steps. And little more conservative and creating spend patterns. So these are some of the things which give us tremendous advantage in the marketplace when situations like this arise, where we would be the first mover. Plus, if we have cash in the bank, we would be able to take good, advantage of the opportunity that present themselves. Who knows? It's very hard for me to give you a number for 2 years, leave alone 5 years at this point. But my goal for the company is to make a brand reckon with on a global scale. Today, you close your eyes and think about search. You think Google now, maybe ChatGPT. Or if you think about friends, you think Facebook, or you think WhatsApp or Insta. On that level is what we want to be. How do we get to that level? What is?
Yeah, great to hear, sir.
As a strategy. That is what we are trying.
Yeah, and my first question. Hello?
Yeah, go ahead, sir.
Yeah, sir. My first question was, if forensic audit comes after 3 years, so what is the plan B so that investor get boosted?
Forensic audit, in terms of information to be given and such, and cooperating very actively with the very actively with us all. There is no doubt on that, and we have to.
Sir, can I give a suggestion?
No, please. Sir. And
sir,
we will continue to work.
Yeah. Hello, sir.
That it doesn't matter. It will come to.
I'm sorry to interrupt you,
Please
sir.
go ahead with the suggestion.
Hello.
So your voice is breaking, sir.
Okay. Is it audible now?
Yes, sir.
Yeah. Sir, I have one suggestion for that. Hello?
Hello.
Just a moment, sir.
Hello? Hello? Hello?
Okay.
Please go ahead, sir.
Hello? Sir, am I
your suggestion?
Yeah,
you're very audible.
Can we bring audited results of subsidiary this year, this financial year, so that it will be a boost to an investor? Can this be a plan B against forensic audit?
That we already talked about in our previous call. See, we are waiting for certain things to come.
Okay.
Settlement, which is just,
Okay, fine.
You already committed that.
Okay. Thank you, sir. Thank you very much.
Thank you.
Thank you, sir. That would be the last question for the day. Thank you. Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation and for using Doorsaba's conference